So my name is Chijioke Igejuru. I work for the International Finance Corporation. We're the private sector arm of the World Bank. Been with IFC now over 13 years. 10 of that being focused on investment in digital infrastructure across emerging markets. So just a quick summary of who IFC is and how we fit into the World Bank Group. And just to be clear, so the World Bank Group is an institution, it's a DFI that is focused on investing in emerging markets. And our drive is to help reduce poverty and help, well, escape poverty in a livable planet. We have 5 institutions within the group. IBRD, so people call IBRD the World Bank, but they are the guys that lend to governments. They actually also provide policy advice to governments. And then you have IDA that lend and provide policy advice to the poorer, least developed countries. You have IC in the middle. Our focus is investment in the private sector in these emerging markets. And MEA are the guys that come in to support where you have political issues. So, for example, issues around FX convertibility and transfer, issues around war and civil disturbance, because a lot of the countries that we invest in typically are exposed to these risks. So these guys actually come in to provide insurance cover. So if anything happens while you're an investor, you can get your money out somehow. Obviously, it comes with some insurance premiums, almost like an insurance product, but targeted at investment in emerging markets. And then we have ICSID. Those are the guys that settle investment disputes usually. So we're a huge institution, been operating for about 60 years now, again, targeting and focused on emerging markets. We would usually do investment in amounts of over $30 billion. A huge part of that is also mobilization. So we don't always invest our own money. We tend to attract other investors. So we have partnerships with other DFIs or even commercial banks to bring funding alongside us, and we call that mobilization. And mobilization could actually be in the form of debt as well as equity. What we've been doing, so at the moment, our portfolio size is about 79 billion. I mean, having done investment of up to 300 billion in emerging markets since we started. As you'd see, a lot of our exposure is in financial institutions, and it makes sense because in situations where we're trying to make or have an impact, but investments are too small, we tend to rely on commercial banks to help make those investments. And more, we're seeing products whereby our clients are going to the banks to get funding, and then we provide guarantee on those loans that have been provided by local banks. And again, as you'd imagine in emerging markets, a key gap that emerging markets have will be infrastructure, and so that's why it's a huge portion of our portfolio. And several other sectors that we cover, manufacturing and services. We also have a VC business that we do investments in as well. Again, given that we're an emerging market investor, it's going to reflect in the countries that we cover, the regions that we cover. And so you see Latin America, you see Africa, and Asia being a huge part of our portfolio. And what we do investments, we do advisory services, and again, we mobilize for projects. In terms of investment, we invest across the entire balance sheet of companies. So we provide equity, we provide debt, and we also provide mezzanine instruments. Again, depending on the nature of the financing or the nature of the project. We're also able to offer some important products we call blended finance, especially in the least developed market. So if you can imagine the risk profile for a country that is torn by war or is severely underdeveloped, the risk profile would attract really high interest rates and sometimes would make projects really unbankable. And so what we do is we leverage support from our World Bank products to introduce concessional funding that can be blended with commercial funding. And that's what we call blended finance, so that we can reduce the interest rate. We provide advice to companies, and I'm going to speak a bit more about that later, but also to governments. Very recently, we worked on a project with the Rwandan government. They were trying to revise the national broadband plan so that they can improve 4G connectivity and introduce competition into the space. And as a result of the work that we did with the government of Rwanda, there's now 4G spectrum available to mobile operators. So it's an exciting space for us because it actually also enables investment in emerging markets. Now, on the digital infrastructure space, we tend to look at problems and find ways to solve those problems. So this charts that you see here are from the GSMA, the mobile economy for 2024. And a lot of even the hyperscalers or the tech companies are pitching the idea of connecting the next billion. But what we're finding is a lot of the people that we are trying to connect actually are in areas of coverage. And at the same time, there's issues around people being able to get the devices to be able to connect, because I think that's the reason why there's a huge gap in terms of coverage and usage. And so while companies, governments are trying to improve connectivity, we still need to recognize the fact that there are people that still cannot afford the devices, but also there's not much usage for those devices once they're connected. And that's one of the things that we're trying to do within the IFC. I would like to draw your attention to the chart on the, I missed this. Okay, so this is what I was talking about. So this is again from GSMA. It speaks to what the profile of connectivity or penetration would look like by 2030. And a few things that are of concern here. One is there's a huge migration from 4G to 5G, which means that a lot of the developing countries will continue to expand on the 5G side, obviously taking the benefit of 5G connectivity. But what's going to happen to emerging markets, especially because, again, there's about 400 million people that are not connected today. And the chart to the right is what I was referring to, where I was saying that, yes, there's a coverage gap. It's not as much as the usage gap. And one of the reasons for this is access to devices and usage of those devices once it's accessed. And one of the issues that we're also seeing is on the smart devices, on the smartphone penetration as well, where at the moment it's 78%, but it's far lower than that. We're going to see that in the next slide. It's far lower than that in emerging markets. And so how are we going to solve that problem? How do we bring devices to people in the rural areas, make it more affordable? That's one of the programs that we're working on at the World Bank Group. So again, this brings home the issues in emerging markets from a connectivity standpoint. Again, if you had to compare with Europe, which I think has one of the largest penetration rates, subscriber penetration rate for Europe is 91%, and smartphone adoption is 82%. But if you looked at Africa, sorry, I'm blocking you guys, I don't know if you can see it, but if you look at Africa, today subscriber penetration is 44%, and then the smartphone penetration is 55%. Sorry, it's 55%. How are we going to help people get access? How are we going to help people get the connectivity that they need to improve their lives? The same thing in the Middle East and in Asia. Some further statistics that drives home the issue or the case for emerging markets. So 81% of the people in the least developed economies are unconnected. So if you thought about the the fact that 400 million people are not in an area of coverage, it's further worsened in the least developed economies. And it's something that is driving us on our push for digital economy, for the digital economy development in emerging markets. And we also observed that from a gender gap standpoint, 20%, women are 20% less likely to get access to mobile internet. But then we want to ensure that everybody has access. We want to ensure equality, even from a digital infrastructure standpoint. And again, the issue on affordability remains. And one last slide on the issues, and I think this speaks to utilization or to usage of newer technologies. Because what's happening, as you see the trends, people moving from 4G to 5G, increase in connecting machines in terms of IoT, which is actually very important in developed economies because you're seeing a lot of efficiencies and optimization taking place as a result of IoT. A lot of those improvements, a lot of those uptakes are taking place in developed markets. And so the question is, what's going to happen to the emerging markets? And so everything is summarized in this slide. There's issues around coverage, there's issues around adoption, and then there's also issues around the quality. And I'll speak a bit about quality, because if you think about, the guy in the rural areas that wants to begin coding, you can't start coding on your phone. You need a laptop that has really good connectivity. And if, these emerging markets continue to be left behind, there will never be opportunities for digital skills or digital entrepreneurship in emerging markets. And that's one of the things that are driving our program. I'm going to give the example of Nigeria. So Nigeria has come up with a plan to fiberize. So this is not the fiberization in Nigeria today. It's far less than this. They need over 100,000 kilometers of fiber to be able to deliver connectivity across Nigeria. The government does recognize that and they've put a new broadband policy in place. But the issue is the areas that are not connected. So if you look at Lagos, you can see quite a bit of connectivity. This is national long distance anyway, but you see a lot of fiberization in the key cities. So talking about Lagos, you talk about Port Harcourt, you talk about Abuja. But the rest of the country, is sparsely connected. Right, and it costs a lot of money to be able to deliver this. And the issue is, as operators begin to consider connecting somewhere like or Sokoto, you now start thinking about the economics. It doesn't make sense. So how do you encourage the mobile operators to begin connecting in those hard to reach or less economically viable locations? And so I introduced this chart. This is by call for government support, because at some point one needs to consider that the private sector will not be able to do it themselves, but then the government has a hand in encouraging. And so from the first chart, every government has a broadband plan, so everybody wants to get connected. So the darker line, the darker line is the government broadband coverage targets, and then this line is the deployment costs. So as you can imagine, it's easier to connect the first third of the country because they're in urban areas. So if I think about Lagos, for example, that's a huge urban center, right? So it's going to be easy to connect more people. You can easily connect 20 million people in Lagos than Sokoto, which would likely be up in the chart here. So as you move from a deployment standpoint, it becomes more and more expensive. And so the call that we're making is there a way for the government to actually come in to support this deployment? So, and by the way, this also applies for countries like the UK, right? So you connect the first third, it's super efficient, you're making a lot of money. By the time you get to the second third, which is this portion here, you begin to get into the less attractive locations, it becomes less profitable. And so how can you get the government to stimulate interest of mobile operators or telecom companies in this space? And then it even gets worse here because you can actually already see that the deployment costs, sorry that I'm moving around a lot, but you can see that the deployment costs go super high. And then again, it becomes super inefficient for the telecom operators to begin to deploy in those kind of locations. And for most emerging markets, we are actually in this second, third, and three-thirds portion of the market. So how do you encourage operators in this segment? And a few things that we've thought about, we're using a cascade approach. So if the commercial funding doesn't work, is it as a result of issues from a policy standpoint? So in the case of Nigeria, is there issues around right-of-way? Is it expensive? Are the taxes so high that it's discouraging operators from deploying? How can you begin to address those issues? Now, let's say you've addressed them, but then the issues of connectivity still remains. The next thing is, how can you introduce DFIs, right? Or companies that are willing to take longer-term financing, concessional funding to be able to ensure deployment. And again, if that doesn't work, then you can actually now begin to see governments, issue PPPs or concessional or concessions to be able to enable connectivity for that last second or a third of the population. And so for IFC, we have the expertise. We've been doing this for several years. Africa is one of the markets that we've focused on in the last few years in terms of building infrastructure. On average, you do about $1.3 billion of investment in the digital infrastructure space to support towers, mobile networks, broadband infrastructure, and data centers. There are other segments as well. So you have the funds. I'm sorry about that. You have the funds as well that we tend to invest in for them to be able to invest in projects themselves, especially when they're smaller than kind of projects that IFC can work on. I'm sorry that I'm moving fast. So these are the core sectors that we're looking at, or that we look at today. Like I said, we look at mobile networks, we look at the tower space, we look at broadband infrastructure, we look at data centers. But because we want to encourage usage of digital infrastructure in emerging markets, we're actually now moving into the service layer, right? So we're now looking at last mile connectivity, we're looking at cloud services, we're looking at system integration, especially those solutions that integrate cloud or AI services into the broad range of services. Those are the kind of things that we tend to look at, but also we're looking at the creative industries as well. Sorry that I'm moving really quickly. Like I said, we're looking at debt instruments, we're looking at equity, we're open to doing a lot more equity these days in the digital infrastructure space. We're also quite interested again on the blended finance side, because we believe that it's going to help to drive investment in emerging markets. There's a new product that we have as well, Upstream. So Upstream is an advisory product that we can actually use to contribute to projects, especially when they're in the early stages. So if you have a project that has capacity that has past technology risk, so there's no real technology risk in it. You've already started signing contracts, started generating a bit of revenues. You don't have to be profitable at that point. You could actually come to IFC to get upstream funding to help you scale and get you to a point where you can attract mainstream financing. The other thing that we do with this upstream product as well is to help companies to develop business plans to address policy issues. It's a super versatile product that most of our clients are beginning to use. For some reason, anyway, so it's a good product, especially in the digital infrastructure space. We're using it in Rwanda. We've just recently used it in Rwanda. We're using it in Angola at the moment. We're using it in DRC. And again, it's supposed to help drive investment. And the other issue that is coming up now, again, is sustainability. We have a sustainability product now where we're supporting companies that want to go green or have net zero ambitions and are trying to find ways to enable that, whether it's from an advisory standpoint or from a financing standpoint. I'm going to have the the slides behind, or leave the slides behind so that you could go through this, but it's quite an interesting product, this one, because we're seeing quite a number of our telecom clients, especially in the mobile sector space as well as the data center space and towers, looking at this product. And finally, I think this is, I was going to talk about the case study, but again, I'm going to leave it in the, leave it for your review later. So something else that the World Bank Group is doing is trying to find ways to combine the expertise of the IFC with the knowledge base of the World Bank to develop products that meet specific needs or attend to specific issues that would enable investment in emerging markets. I think it's something that we should look at as an area to get for digital infrastructure funding, especially from the connectivity standpoint, rural connectivity, as well as access to affordable devices. And let me just take this, if you don't mind, 1 minute on this case study, which I think would drive home the reason why we think government should step up their game in terms of being able to achieve improved penetration rates, especially from a broadband or connectivity standpoint. So one of our key strategic clients is Liquid Telecom. They have a concession with the Eastern Cape government to deploy fiber in the region. So the Eastern Cape government need fiber to connect their offices, and so they're able to enter a long-term contract with Liquid. And so what we've done is partnered with Liquid to enable the concession, to enable the infrastructure required for Liquid to deploy the fiber for the concession. But what that's also going to do is any excess capacity that is available can actually be sold to other operators in that region. So all of a sudden you have an anchor tenant, which is the government, and then you have additional customers that could come onto the network, which then makes the project a bit more viable. Again, this would not happen if the government wasn't interested in enabling connectivity. And yeah, so I'm going to leave it. There's another example in Malawi that we did, but I'm not going to talk about this because I promised I was going to do one case study. But this is what we're doing basically within the World Bank Group, bringing our policy advice, bringing advisory capacity to the private sector, and introducing all sorts of investment instruments to be able to unlock the opportunities in emerging markets. And thank you very much for listening.